We all love the idea of buying into huge corporations like Apple and Tesla and Amazon and many others. But the struggle to buy one share was pretty real, let alone buying a few of them. Well, look no further, ETFs are here. Hey guys, just Vaish here. I've taken a look at 5 major Canadian ETFs that will build your portfolio and give you exposure to amazing companies like some of the few that I've listed. If you're not already subscribed to the channel, hit that subscribe button and drop a huge thumbs up to support future videos. But until then, I'll see you there. Now the first ETF is VSP.TO, and that's Vanguard's S&P 500 Index ETF. It's trading at around 69 Canadian dollars, and it's worth noting that this is a Canadian dollar hedged ETF. So it's almost like an equal counterpart to VOO, which is a US dollar hedged one. And both of these equally sort of track the S&P 500, which in effect is essentially tracking the performance of the broad US equity index and the returns of large US based institutions. So it's going to give you quarterly dividends yielding a 1.22% dividend yield. And you can expect consistent returns because it's tracking a broader base of US institutions. Now, the second ETF that I took a look at is ZDV.TO, and that's BMO's Canadian Dividend ETF. It's trading in the ballpark of around $18.44. And with ZDV, it gives you exposure to top Canadian dividend-paying institutions. So not only are you getting that exposure to these solid Canadian companies, but you also get a piece of their dividend as well. And a lot of these institutions come from more relatively stable parts of the economy and stable sectors, such as banking, Canadian telecommunications companies, and Canadian transportation companies. With a lot of these, they pay quarterly dividends, but as a holder of ZDV.TO, you're getting a monthly dividend yielding about 4.4%. So with that, you're getting a monthly recurring payment, building a bit of income, and getting that exposure to large Canadian companies. Now, the third one is XIC.TO, and it's a bit of a long one. So it's iShares Core S&P TSX Capped Composite Index ETF. And what it essentially does is it takes the same tracking principles as the S&P 500 and applies that to TSX-based companies. So a lot of these are your Canadian long-term capital growth companies, which come from sectors such as banking and then energy, tech, and transportation. So you're getting more exposure to traditionally financially backed institutions that pay a dividend and some that may not. But as a holder of this ETF, you get a 2.77% dividend yield, which is paid out on a quarterly basis. Now, the fourth ETF that I've taken a look at is ZWC.TO. So that's BMO's Canadian High Dividend Covered Call ETF. With this one, of course, it's trading at around 18 Canadian dollars, and it's giving you exposure to high dividend paying Canadian institutions. But what's a bit more unique about this one is it also dynamically writes covered call options. So whether the market's going up or the market's going down, whether companies are paying dividends or not, you're getting exposure to these options plays. And traditionally, we've stayed away from options trading because it's seen a bit more risky or there's more capital that's needed for the investment to be made. But with this ETF, you're getting that options exposure, and whether or not you choose to exercise that later is entirely up to you. But by investing in an ETF such as this one, you're getting a 7.62% dividend yield, and that's paid on a monthly basis. So in addition to ETFs like ZDV.TO that are giving you that exposure to high dividend paying companies, you're also getting the option to get a bit of sort of exposure to these options calls. And the fifth and final ETF that I've taken a look at is XUU.TO. So this is iShares Core S&P US Total Market Index ETF. And simply put, it's tracking the entire US market. And it's covering your tech and long-term capital growth companies as well as the total market index. So this is a much more conservative ETF that's just giving you a broad range of exposure into many companies, and it's a much more safer play. And that's giving you a dividend yield of about 1.25%, which again pays you on a quarterly basis. But with this one, it's more about offsetting risk and hedging your bets in every single part of the market so that you essentially even out at the end of the day. It's trading at around $38.12 Canadian, so at that price, you can essentially get exposure into all elements of the market. Now, when it comes to investing, you don't need to have a large amount of money and invest in individual institutions. Doing so, you're essentially hedging a lot of your risk in those individual investments. But with ETF investing, you're spreading out the risk across many parts of the market and also different markets as well. With ETFs, you're getting a small portion of ownership in different companies across a various range of the sectors. But with that, VSP.to, ZDB.to, XIC.to, ZWC.to, and XUU.to give you different elements of exposure and offsetting risk. All of these pay dividends, whether it's on a monthly or a quarterly basis, and you could essentially make sure that your money is building and multiplying on a consistent basis. With ETFs, I love doing them because they take a comparatively small amount of money and they give you a much larger level of exposure. So then next time you guys are thinking of investing, make sure to come back to this video to check out these 5 ETFs and reference my previous video for 5 solid Canadian dividend-paying companies to build your portfolio. If you guys loved the video, please drop a huge thumbs up. And if you already haven't subscribed, hit that subscribe button to support the growth of the channel. But until then, I'll see you next time.